Hey gang, Anthony Carr here. I want to go over again in 2024 the capital gains taxes topic when it comes to selling your property. And you will be able to avoid capital gains taxes on certain amounts of profit that you get from that. So the capital gains is income tax you pay on gains from selling capital assets, stocks, also real estate, and that includes your home. So we're going to talk about how do you avoid taxes on that. I'm not an accountant. I'm not an attorney. I'm just a broker, realtor that's done a bunch of real estate in the DC, Maryland, Virginia area. And I'm gathering the information for 2024 from realtor.com, nolo.com, and the irs.gov. So that's where I'm getting the information. I'm sharing it with you. Right up front, most homeowners will owe $0 on capital gains. Because the exemption is so high, you most likely will not hit that area of capital gains where the capital gains tax comes into play. There are exemptions to you having to pay taxes, and there are also some requirements that you have to have. Number one, the house you're selling has to be your primary residence, not a vacation home, not an investment property. However, there are means of avoiding capital gains for investment properties as well. That's a different topic, different video, and be looking for that one as well. You must have owned the house at least 2 years, and then you must have lived in the house for 2 of the last 5 years. So you could have lived in it 2 years, you sell it, you get capital gains, you may be exempt. But if you've lived in it for 2 years and then you rented it out for 3 years, you have to sell it within that 5-year area to be able to take advantage of these capital gains benefits. Otherwise, it turns into a rental property and you have to look at it a different way. And you cannot have taken the exclusion in the last 2 years. The amounts that they are exempting here from capital gains tax are pretty high. If you're a single owner, it's $250,000 of gain. If you're a married couple, it's $500,000 of gain. Those numbers have not changed since 1997. There was a bill introduced last year to double it. I'm not sure that passed. Pretty sure it hasn't, because right now they keep touting that the numbers are $250,000 for each homeowner and $500,000 per married couple. What that means is if you gain $500,000 on the sale of your property, you do not owe any taxes on it. Doesn't mean that your proceeds are $500,000. It means the gain out of all that is $500,000 or $250,000. So let's start getting into how we calculate that. You start with the base value of your property. Let's assume that you bought the house for $400,000 several years ago, and you've raised some kids, and you've done some improvements to the property over the years, and you made these major improvements. That is added to the basis of your property. So let's say that you remodel the kitchen and you finish the basement. Okay, but these are other items that you could add on to the value, the base value of your property. Some things would not be, but these would be included. So you have a basis that you bought 25 years ago, $400,000. You redid the kitchen and the bath. You put $100,000 into it. Now your new basis as a homeowner is $500,000, and that's where we're going to start our calculation. So let's say now you're going to sell the house. 25 years later, it's $800,000 is the sales price. So you remove your cost of sale. You're going to have taxes, marketing, transfer taxes, commissions, fees, all of that. Let's say it's 7% just to round it out. Depending on what state you live in the DMV, it could be quite a bit more. Maryland has some higher taxes, which would make it more than 7%. But let's say you got 7%. 7 times 8 is $56,000. So now I remove that, and my proceeds are $744,000. That's not my basis. That's not my capital gains. That's not my capital gains. I have a basis. So I remove that basis from the $744,000, and I have a capital gain of $244,000. With me? Good. Let's keep moving forward. If you surpass that, let's say that you had sold it for $1.5 million. okay, instead of 800,000. Now you're entering into a field of, I'm past the tax exemption. I'm past that gain level. How much do I owe? Well, that depends on what your income is in the year that you're selling it and getting the capital gains. If you're single and married filing separately, your earnings, if you're making less than 44,625, you're at 0%. You walk away with all that money. Married filing jointly and qualifying surviving spouse, you're earning less than $89,250. Again, you have no capital gains tax. And head of household earning less than $59,000, no capital gains tax. Now understand, what does this mean now? At this juncture, it means that you have made more than $250,000 as a single homeowner, or $500,000. So if you had $100,000 of capital gain taxable income, it means instead of $250,000, you gained $350,000. So you got the exemption to $250,000 and you got $100,000 of taxable capital gain. You with me? Good. Now, if you're in that $100,000, I made $100,000 in capital gain beyond the exemption. Again, let's keep it at $250,000. That's the exemption. I made $350,000. Okay. I have $100,000 now that I have to pay capital gains tax on. $250,000 exempt. I got $100,000 over here I got to pay taxes on. Again, based on your income. Now, if I'm a single filer and my income is between $44,625 and $492,300, this huge swath of income, then I owe 15% of the capital gains above that $250,000. So let's again go back to our $350,000 gain. I have $100,000 more. I got to pay 15% of the 100,000. So that is going to be $15,000. So I made $350,000. $15,000 is going to be paid on tax on capital gains tax. If I'm married filing separately, you see the changes on that one. Now, big benefit when you are married filing jointly, because it's $250,000 per homeowner. So yours is $500,000. So you'd have to sell quite a bit to get this 15% bracket. But let's say that you did sell it and you made $600,000 in capital gains, which means you reduce it $500,000 for your exemption, and I got that $100,000 there. I owe 15% if my income is in between $89,250 and $553,850. I'm at 15%. Head of household earning between $59,750 and $523, and then there's a 20% capital gain. So you not only made the capital gain and you were made over the $500,000 for married, filing jointly, and $250,000 for single. You also have an income of over $492,300. So I make $500,000 a year. I made $600,000 capital gain, of which $500,000 was exempt. I now have $100,000 sitting here that I have to pay taxes on. That's the 20%. So you'd owe $20,000 on that. Married filing separately, you see what the numbers are there. Married filing jointly, you're making over $553,000. Then yours is at 20%. Head of household earning between over $523,050. Then you can see that that's where I hit the 20%. Okay. I hope this helps you. Again, I'm not an accountant. I'm not an attorney. You need to talk to someone personally about what's going on with that. But as a general rule, this is what it takes to, this is what it would take for you to avoid capital gains tax when selling your property. Thank you very much and have a great day.